Hello, I'm Ryan Lightfoot Amanoff of Fund Caliber, and today I'm joined by Deirdre Cooper, the manager of 91 Global Environment Fund. Deirdre, thank you very much for your time.
Thank you, Ryan. It's a pleasure.
Now, the fund has quite a unique approach, only investing in companies that are contributing to the decarbonisation of the world's economy. Can we just start with this approach? Why do you have it, and how does climate change impact the economy?
So we have it for two reasons. The first reason is because we really believe that over the longer term, those companies will benefit from a structural growth tailwind, which should lead them to generate higher revenues, ultimately better cash flows, ultimately lead to value creation. And the reason that we believe that is because, as we all know, and as we're going to read a lot more about into the climate conference in Glasgow next month now, we are still way behind in terms of the level of investment happening globally in decarbonisation. And we think that's going to change. So we think global climate finance will move from where it is today, which is about $700 billion or so a year, to more like 4 or 5 trillion. And those were the numbers given in the IEA, the International Energy Agency, which is the preeminent research organization on energy markets, when they published their very first investigation of the investment needed to get to net zero in the spring of this year. So if you're a group of companies that are investing, selling into a market that needs to be 4 or 5 times bigger, then that's really an exciting structural growth tailwind. And then the second reason is the impact reason. So those companies, because all the products and services that they offer are helping to solve climate change, those companies are generating a positive impact through their business. So, they are making buildings and factories more efficient. They're providing lower carbon consumer products and food. They're helping to build out the next generation of renewable energy. They're selling electric cars or the components that go into those electric cars. And all of those things are helping to move us very gradually towards that more sustainable net zero world.
And the fund is about a third weighted in Europe. How has their Green New Deal impacted your holdings?
No, it's been a really important driver. So if you look back at the strategy, I think it was May of 2020 when that Green New Deal, the details were first announced, and the strategy really responded to that. Beginning of this summer, you also had the Fit for 55, which is the next step of implementing the Green New Deal. And that was also so helpful in sort of June and July. So, that is one piece of policy that is effectively designed to increase the amount of investment in climate finance. And whenever that happens, that's very positive for the strategy. Of course, with regulation in general, the devil is in the detail. So while the EU policy at a very high level is incredibly positive, and is probably the most forward-thinking climate policy in the world, that then has to be implemented at the country level. And that takes time. It takes political negotiation. As you know, many countries in Europe have coalition governments. They need to get all the parties aligned. There's always groups, who have legitimate concerns. So we have to be very careful when we decarbonize that we do it in a just, inclusive way and think about the people that are left behind. But we watch all of those policies very closely. We run very detailed models on the shape of energy markets, the shape of transport, the future of food. And then we update them as we see policy changing, typically not the sort of high level statements, but rather when we have a good view as to how that's going to be implemented in each country.
Thank you. And renewable energy is a large feature of the fund. Your top holding is Next Zero Energy. You even report sort of your renewable energy usage on your fund fact sheet. With the options out there, why aren't we all using renewable energy? What do you think is the biggest obstacle to a wider, faster rollout?
So it really is sort of time and investment. To change the shape of the electricity grid is not an easy task. And the first thing that the companies that we hold, like NextEra, that are the leading investors in the sector. So we hold Nextera, we also hold Iberdrola. So each one of those companies spends about $10 billion a year in capex. If you remember, I said at the beginning, global climate finance is sort of 600-700 billion. So they're a really big chunk of that. And what they look for is visible regulation. So what they really struggle with is when the rules of the game keep changing. And that's particularly important for renewable energy versus fossil power, because with renewable energy, you need to spend all the capex up front, and then you earn the return over the 20 years. Whereas with traditional fossil generation, the investment is less, but of course you have an input cost. You got to buy your fuel, your gas, or your coal. So if you want to encourage investment in renewable energy, you need to make sure that the companies have a long-term visible market environment in which to invest, and that the rules of the game won't change over the course of those 20 years. And that's the case in some markets, it's not the case in others. Nextera is a super interesting company. It's the world's largest owner of wind and solar generation. It's North America only. The piece of legislation that really benefits them is the infrastructure bill that's going through Congress at the moment. So the Democrats are very keen. It was a key part of President Biden's election manifesto was to commit the United States to really be at the forefront of helping to solve the battle for climate change. His representative on the topic is John Kerry, the former presidential candidate. He'll be a key participant in the Conference of the Parties. And President Biden has already talked about committing the US to 100% renewable electricity, 100% electric vehicles by the mid-2030s. And that, as it's being implemented, and the key vehicle really is that infrastructure bill, both the bipartisan bill and the bill that the Democrats are working on, which they will have to probably push through on their own. Those things will really help us move forward on that agenda. And we remain quite optimistic that those are likely to happen in the fourth quarter this year. And that would be a big benefit for the companies in which we invest.
And moving back sort of closer to home, we see that Iceland recently opened the world's largest carbon removal plant. Do you think that sort of removing carbon and carbon capture technology fall into your fund's universe at all?
Absolutely. The problem is that today, those technologies are just very early. So the plant in Iceland is really exciting. As you said, it's the first large-scale plant. But the implied price of the carbon that they remove is about $1,000 a ton. So to put that in context, the European Union has a regulated carbon market. So if you're a utility or a steel company or an airline, a company with a lot of emissions, you have to buy credits in that market, or you have to cut your emissions. And the price of carbon in that market is about 60 euros. We're about next week, we're running a big conference called the Investing for a World of Change conference, which will be really focused on climate and the transition and what the transition means for emerging markets. And we bought some carbon credits from a solar farm in Rwanda, because as a business born in Africa, we really want to support those initiatives. And the implied price of those credits is about 26 euros. So the 1,000 euros is an enormously expensive number. And that's really the problem with carbon capture today, is that the implied carbon price you need is very high. So we don't currently have a huge amount of exposure. We own a company in Denmark called Novozymes, that is a world leader in enzyme technology. So those enzymes are used to make plant-based burgers. They're used to make washing powders run at lower temperatures. They're used in industrial processes, but they could also be used for carbon capture. And that's a little piece of option value within Novozymes. They talked about that quite a bit at their Capital Markets Day last week. That's totally not in the valuation. And that's probably how we would like to have exposure to carbon capture at this point in time, because it is reliant on such high carbon prices. It would need enormous amount of political action to make that scalable and economic. I'm not saying that won't happen, but that's not something that we would want to pay upfront for today.
And then finally, you've got very little exposure to the UK, just one holding, I believe. Is there not much opportunity in the UK stock market?
So our process is a bottom-up process. We're looking for best ideas from all around the world. That leads us in different places. What we find with our decarbonisation universe, and to some extent, it maps a little bit to the source of global carbon emissions. So the UK is less than 1% of global carbon emissions. The EU is about 9%. The US is about 15%. China is almost 30%. So if you want to invest to decarbonize, you end up being slightly more biased towards China and emerging markets. So it's not necessarily that there aren't great companies in the UK. Croda is one of our biggest positions, one of the companies we're most excited about. We see Croda as the solution provider for sustainable low carbon consumer products. So, when they spoke recently at their Capital Markets Day, they talked a bit about how the fact that L'Oreal, only want to launch sustainable products going forward is a big driver of Croda's growth. At various points in time, we have had other businesses in the UK, but we look to find those opportunities that have a lot of structural growth from decarbonisation, but that's not necessarily appreciated by the market. So we have, lots of upside in our valuation, and at the moment, Croda is the only one in the UK that fits that bill.
Deirdre, that's been really interesting. Thank you very much for your time today.
It's a pleasure. I've really enjoyed it.
And for more information on the 91 Global Environment Fund, please visit our website, fundcaliber.com. And for more from our video series, please don't forget to like and subscribe below.